welcome to Prime Property, your weekly real estate reckoner. I'm Nayantara Rai and this is what we have on the show today. With the festive season around the corner, should you buy property now or wait for rates to drop further a few months down the line? What all freebies and discounts can you bargain for right now? We asked Jones Lang LaSalle for answers. We check out how residential prices are holding up in our price-o-meter. We also ask Cushman & Wakefield to identify growth corridors in the big cities. Donald Trump has tied up with Lodha developers for a residential tower in Mumbai. We find out more about this golden-colored 70-story high tower on our launch pad. This week we decided to focus on how you should approach the property market ahead of the festive season. Builders suffering from slow sales and high unsold inventories will be hoping for a sentiment turnaround this festive season. The festive season beginning around Dussehra time is typically considered an auspicious time to purchase a property. But this year's festive season will be clouded by one of the worst years the realty market has gone through in recent times. So should you defer a decision to buy a property and potentially benefit from lower rates a few months down the line? The National Housing Bank, or the NHB, was recently one of the first institutions to raise the red flag when it spoke of a broad-based slowdown in the real estate market. NHB, in its April to June Residex quarterly report, has said home prices have fallen in 22 of the 26 cities it tracks. Jones Lang LaSalle says a price correction is imminent as real estate inventories are close to an all-time high in the 7 big cities. It says builders in Mumbai are sitting on an inventory of 48 months, Delhi NCR 23 months, Bangalore 25 months, and both Kolkata and Chennai are at 17 months. This is all above the comfortable level of 14 to 15 months that builders normally take to clear inventories. All of this data points to the fact that we are in the midst of a buyer's market. So by how much will builders cut prices to lure buyers? Can you bargain freebies and other discounts this festive season? I reached out to Jones Lang LaSalle for all of those answers. Ashutosh, first up, these are terrible times for builders. Are they announcing price cuts?
Indeed they are. They are under increasing pressure, and because the sales have dropped and they have been dropping quite steadily over the last few months, they are more flexible now. They are less adamant and more willing to strike deals because they know that they have to get rid of inventories pretty soon. Otherwise the stress is going to get simply too much for them to be staying afloat. So we do have signs of developers offering not only discounts in terms of discount in kind was there for some time, but now we have signs of developers offering limited period offers in which the base price is offered at a discount and other deals to force sales. So indeed it is a situation where developers are a lot more flexible and buyer has now better and more strength to negotiate good deals.
We're clearly in a buyer's market, so when builders announce these limited offer deals, are they even seeing any takers? Are they translating into higher sales?
Yes, I think so, because we do have a few examples where developers offered such schemes for limited period. The sales did pick up.
And what kind of a discount or price reduction are builders offering in these limited period packages?
Easily 10%, and at a few occasions more than that also. Also, if you add the freebies or the discounts in kind to the base price discounts, it easily crosses 15%. So that much of stress is definitely there in the market.
Okay, so 10% straight up discount plus a 5% discount that you're factoring in for all kind of freebies. What kind of freebies are you really talking about?
Yeah, there are different freebies. For example, some developers are absorbing the stamp duty registration charges. Some of them are offsetting the preferential location charges, which also include the floor-wise charges. The otherwise chargeable clubhouse or the common amenities membership fees are being waived off. There are certain direct gifts in terms of cars or modular furniture. So these are the different types of freebies along with the base price cut in extreme cases that the developers are offering. There are many developers who are offering discounts in kind, and few developers discount in base price cut along with discounts in kind.
And is this trend peculiar to Mumbai or Maharashtra? Because, we don't really hear about such schemes or see ads here in the National Capital Region.
I think different cities will have different stress levels and different point in time when they will be announcing such freebies or base cuts. The markets which are more driven by end users will see those offers sooner than those which are highly governed by investors. And I think that could be one of the reasons why there aren't so many such schemes floating around in NCR than some of the other cities.
So in which all cities are you seeing builders offer such schemes and freebies?
Mumbai city, for example, has 48 months of unsold inventory. That's a concerningly high number. No wonder why we are seeing more and more such schemes in Mumbai. Whereas in NCR, in Gurgaon, we have only about 16 to 17 months of inventory. So situation is not that bad still. For developers to announce. Developer can still hope to find a revival, festive season coming up and delay those offerings. So I think the number of months inventory left, I think it's a very good indicator where you will find more number of such schemes.
Ashutosh, you're talking just ahead of the festive season. What are your expectations from builders? What will they do to lure buyers?
I think that's the traditional high activity season in India anyway, the festive season which coincides with the fourth quarter of any calendar year. That is the NRI season as well, where non-resident Indians do buy a lot of properties during their annual visits back home. And given the weakening of currency, though of late the strength of rupee has improved, but overall the value of rupee dropped. So the contribution from NRI also has increased. So I think in this festive season you will see more schemes, more discounts in kind, and more soft attractions from the developers.
But Ashutosh, you don't anticipate a price cut of more than 10%. Isn't that what is really needed, a sharp price correction to attract buyers?
I think eventually they will. It's quite natural on their part to start with the freebies first and try to see if enough sales happen with the freebies. If there isn't enough offtake, then they anyway have to resort to price cuts. Price cuts will not come upfront. We'll have to see how much is the market response to the freebies and the soft discounts, if the sales still don't pick up enough pace, then certainly during the festive season you will get base price cuts also. I'm
going to put you in a corner and ask you straight up, how big a price correction is on the cards?
I will give a very straightforward answer that it should be between 10 and 15%, but I think the trigger will happen sometime mid-October.
So there you go, developers may try to delay a price cut, but a pretty steep one seems very much on the cards. But let's tell you the residential prices reigning at the moment in the big cities. Time for our price-o-meter this week, courtesy Cushman & Wakefield. Mumbai's property market at best can be called subdued. Cushman & Wakefield says it's seen a price appreciation in those properties that have been completed and are ready for move-in. This is for prime locations like South Bombay, Worli, Prabhadevi, Bandra and Andheri. Where prices are reeling under pressure are for all those projects that are still under construction. We asked Cushman & Wakefield to identify the growth corridors.
Properties such as Samudra Mahal, Hill Park, Kamal Mahal, or such iconic properties because of the neighborhood profile of the people that live, people who are, coming and becoming billionaires in this market wanted to announce that they have picked up a marquee property in a financial capital of the country. So that traction is very much there in Mumbai. You should look at Goregaon East, Borivali, Kandivali, in certain new projects which are being launched with proper approvals in place. And simultaneously, if you look at the LBS Marg, where you have Bhanduk to Mulund, all the way, a lot of large and quality, residential projects coming up at a decent price in comparison to other micro locations in Bombay. When you look at Thane district, and there is a corridor between Thane city and Vashi. Vashi, of course, is the most expensive, and Thane city on the other side is also very expensive. There are some pockets in between, whether it's Airoli, Ghansoli, Kopar Khirane or Juinagar. There are some opportunities that the investors and buyers can think of. And if you go slightly beyond, so Kalyan, Dombivli, Of course, simultaneously Kalamboli and Urve, a lot of these new pockets which have not been capitalized as much. Prices have gone up in last 2 years, but there's still scope for an upside.
There's been a rub-off effect of Mumbai on Pune's realty market. Nearly 4,400 residential units were launched in the April to June quarter, and that's a 34% year-on-year decline. Most of the launches were seen near the NH4 bypass area such as Hinjewadi and Vakar.
If you want to make an investment from return point of view and capital appreciation point of view, is basically the Hinjewadi, the Talegaon, Wagholi, and even Kharadi, even today, although it's gone up substantially, offers a lot of attractive opportunities and upside. Perungut towards Lavasa city is also a location where a lot of organized large developments have come with appealing to higher lifestyle because of villa developments over there.
Down south in Bangalore, nearly 10,500 units were launched. A lion's share of 30% was in the east in Whitefield, Marathali and Old Airport Road, followed by the north like Hebbal and Bellary Road. Cushman & Wakefield's outlook is for prices to appreciate in Hebbal on the back of continued investor interest. It also expects good traction in Malleshwaram and Rajaji Nagar due to the upcoming metro.
If you want to invest, you can actually go towards Hosur city if you are conventional investor living in south of the Bangalore city, that's where you've always been, or you can actually go to the Sarjapur corridor, which is booming, or if you actually want to have much more value for a lot less capital that you spend, Whitefield actually has become its own district of a kind, very self-sufficient and fairly connected with the airport as well as to the south of the city.
Property prices in Hyderabad have been appreciating since the Telangana resolution. Nearly 4,400 residential units were launched in the April to June quarter. That's almost 7 times the launches witnessed in the January to March quarter. The Hyderabad property market has also benefited from increased NRI activity on the back of the depreciating rupee.
If you're looking at 5 years investment lease, you should just go and buy quality residential development in Madhapura, Gachibowli, within 5-kilometer radius of that location, Kokatpalli, or indeed towards other emerging corridors that you notice towards Shamshabad or indeed Mechal, if you want to be close to the city.
Chennai remains a stable property market. This is one market that never appreciated to the levels that we saw in Mumbai or the National Capital Region. Cushman & Wakefield is quite bullish on Velachery. Launch activity is also up quite sharply, almost 40% quarter on quarter, mainly in locations like Grand Southern Trunk Road, Mugaper and Rajiv Gandhi Salai.
I was actually quite surprised to see upmarket development in Velachery, which otherwise was not considered a hot location from luxury or premium housing point of view, saw some record-breaking price increase, and of course the established locations within the city continue to increase. When it comes to investment and return, if you want to really take an upside of 20-30% next few years, is basically the Oragadam, Sri Primadur and of course the OMR, which continue to provide opportunities.
The National Capital Region, often called a speculator's paradise, may be the first realty market to go horribly wrong. Property prices in prime South Delhi locations like Defence Colony, Maharani Bagh, Greater Kailash and Panchsheel Park have fallen. There's also been double-digit decline in rentals over the last quarter. And in Gurgaon, new supply in the luxury segment has been at prices lower than the prevailing market rates. This has also resulted in developers going slow on launches. Noida, on the other hand, has witnessed a marginal 5% price appreciation.
What you should look at is basically multiples over 3 years, and if you can see that coming, you should go ahead. My belief is it could be Noida who can offer, that market can offer more opportunities, and also the outer peripheral locations of Gurgaon, including the highway connecting to Faridabad, which remains in comparison to Gurgaon undervalued but yet connected very well with Gurgaon.
We have to slip into a short break. On the other side, we tell you about Donald Trump tying up with Lodha developers for a tower in Mumbai. The starting price of a 3 BHK here is 8 crore rupees.